Up and up again. That seems to be the description of Airbnb share price last week. As it prepared its IPO, at one point it was worth 42 billion US dollar, and then after the first day of trading, it jumped all the way up to 100 billion US dollar in valuation. That's larger than Hilton and Marriott combined, and that's certainly larger than Uber. I joined BBC to have a discussion about the earlier valuation. How could Airbnb achieve such a stellar valuation in the depth of the global pandemic?
The stock market investors then are betting that the tourism industry will come back strongly. It will get back to where it was before the pandemic.
Well, there are a couple of things happening here. Of course, the investors or the financial market per se are foreseeing tourists are going to come back after the pandemic crisis is over, but they also disproportionately reward organizations we called prepared for the future. And that really came out from the research coming out from IMD. We measure company how ready they are for the future, and Airbnb basically top every single category we measure when they're prepared for the shift of consumer behavior, for the new travel habits, all the way to consumer experience. And I think this is why you see the investor are paying disproportional premium right now in driving up the valuation of this company.
Airbnb made a profit in the most recent quarter, didn't it? How did it manage to do that, given so many travel and tourism companies have had an absolutely terrible time of it?
I mean, this is really interesting, the way Airbnb facing the crisis. If anything, they're using the crisis time to get themselves lean. I mean, they slash all these marketing dollar, right? They stop paying advertisement on Google and saving something in the range of $500 million. And in that regard, they plow back this investment to the consumer experience on the website. They do not completely go, zero on revenue per se. I mean, a lot of people still renting places in upstate New York, for instance, where I am located in New Hampshire, getting out from the city to work remote. So it's not a complete destruction of their revenue, but more importantly, it changes their business model. You have companies like Booking.com and Expedia still spending millions and millions of dollars in Google Ads, versus Airbnb, out of necessity, they stop doing that and they pivot into generating their own traffic onto their website. I think after the pandemic crisis, they basically can almost having like an Amazon effect. They drive internet traffic directly to their own website, becomes a category on its own. That is really powerful.
And the index you heard that IMD used to track the preparedness of companies involves 7 dimensions. We measure the financial result, the share price performance, the productivity, the employee diversity, all the way to resilience of performance during the COVID-19 crisis right now. And of course, Airbnb somehow top across all these categories. But if you're looking at the second and the third winner, it essentially illustrates the distinct strategy that one can still win in the global hospitality industry. Booking.com is not just a mere fast follower of Airbnb. They play a very different game. They acquire brands, they run experiments. At any instances, there are tens, if not hundreds of thousands of online tests going on parallel. That allows Booking.com or the managers to learn from success and failure to optimize their platform as much as possible. Marriott is also an interesting example. They bring intangible innovation to their client and their customers. It's not just mobile service and mobile check-in, but also the online and offline personalization. That's put Marriott ahead of other hotel lines around the world. Obviously, the big question becomes, is Airbnb worth too much? As you expected, this week we saw the share price begin to slow down, reaching about 17 billion US dollar. That was in fact my concern last week when I was speaking with Bloomberg Radio, as we saw the storytelling of Airbnb might reach its final limit.
I think we have to recognize, it seems to me, one of the elephants in the room, the fact that the Fed has been so accommodative to markets, and we have a great deal of liquidity, a lot of money looking for a home and a big return.
Yeah, I think this is the general stock market performance right now, right? If you're looking at Disney right now, they has fully recovered, even surged beyond before the COVID pandemic period in terms of price range. And it's the same thing, of course, Tesla and all of that. So I think right now, because of the quantitative easing, what we're seeing is almost like storytelling capitalism, if you will. If you have a good story to tell, if you can position yourself as building up capability for the future, then yes, investors are in general disproportionately award yourself. Because after all, if you look at Airbnb right now, it's almost double the market valuation compared to Booking.com. Both of them are asset light, but Airbnb have a much stronger story to tell in terms of brand equity and direct user traffic directly to their website, independent of Google ad spend. So I think this is where we see the great divergence between losers and winners in the share market.
Still, no one can deny Airbnb is a remarkable organization, and its CEO as well as its co-founders are well-liked individuals, and like many of the Silicon Valley CEO are under extreme scrutiny by the public as well as regulators. Now, what's your experience with Airbnb, and tell us what you think about the future of this remarkable organization.